In-house, we have Bloomberg's Cristina Alesci, who is our deal guru, if you will. And Cristina, talk to me about this deal. 63% premium to Friday's closing.
Yeah, what's interesting here is, what we've seen pretty much in the last year in the acquirer stock is that their stock price has actually gone up, which is contrary to what usually happens when a company buys another company. Their stock price goes down, which is what you see here. So just observing Google shares right now, they really aren't moving. Actually, they're going down. So the market is unclear as to what investors, as to whether investors really think this is a good deal, that they'll actually be able to compete with Apple. Now, with the real winner here is clearly Icon. He just issued a statement. And he has about 28 million shares of the company, and he's been pushing for a long time. We've actually been chasing rumors in the market that he was up to something. And if you look at Motorola Mobility's share price beginning about August 8th, you'll see that it was a pretty consistent rise up. So the market had some kind of indication that something was going on here. Either he was agitating for something, but we can look at the share price and kind of make a conclusion that somebody knew something.
Tell me about the 63% premium, though. Where do they figure in? Where do they get the $40 a share number for? Is that where these deals have been happening? Is that in line with some of the deals that were done earlier in the year?
We definitely have to take a look to see whether the premium is in line with the rest of the telecom deals that have been done. But one thing is for sure, activity in this space, if it wasn't for the recent market turmoil, I would say this was going to be one of the hottest sectors going forward this year. At least that's what bankers and analysts were telling us in terms of M&A activity. So you can see why there was such a high premium, but right now we can't put that into context. Hopefully later in the day we can.
And then put this into perspective just from all the volatility we saw last week. I mean, we talked a little bit about deal pipeline. We talked about IPOs. Many markets were in sort of a holding pattern to figure out what is really happening with the economy, and certainly waiting for volatility to quiet down a little bit. Is it sort of surprising? Why the timing of the deal now?
Yeah, what's incredible here is that, large corporations are going forward with their strategic long-term plans, despite the uncertainty in what will happen with consumer demand, with the larger economy. And this goes to reinforce the fact that M&A is really a long-term market. You could have short-term fluctuations. That's not going to change the way companies, at least like Google, that have so much cash, they don't have to rely on the financing market. So even if borrowing costs go up, Google isn't going to have to tap the market. So.
All right, Cristina, thank you so much.